So very good morning to our RANsquawk listeners and welcome to the opening rundown. In terms of what we've seen, continued focus here on government bond auctions. This time it was the turn of a new 10-year benchmark coming out of the Spanish Treasury and also a variety of 4 different maturities ranging from 2 to the 5-year sector from the French Treasury. Firstly, it was the Spanish one which really took precedence. The overall cover ratio, not too bad, however slightly softer than we saw on the older 10-year lines coming out of Spain, and they only sold around the midpoint of the indicative range of around €3.5 billion, comparative to France, who managed to sell towards the top end at €7 billion. As such, there was a more market reaction seen after the Spanish results. We've seen continued blowout in the 10-year peripheral bond yield spreads. Keep a very close eye on Spain. It's getting ever closer to the psychological 500 basis point level now as that yield continues to creep higher over 6.5%, getting close to that near of where Italy trades, just above 7%. In terms of that though, since then we've heard the ECB touted to have been back in the market. The clip size said to be a little smaller than what we've seen in recent sessions, but it seems to be just helping resist or find some resistance to that 500 basis point mark in the Spanish spread. Elsewhere, the other one to keep a close eye on is France. That spread has actually crossed now the 200 basis point level for the first time, which is a Euro area record. Elsewhere, we've seen in the shorter end of the curve in the stirs both Euro-dollar and Euribor trading lower. Higher fixes in Euribor have been seen, and it is to be anticipated as well with the LIBOR fixings which are due out shortly. Continued bank funding fears are really taking precedence. Financials are the worst performing in the equity breakdown in European markets at the moment, and also European players had the chance to react to that Fitch comment which weighed on US financials and equity markets at the close last night, after Fitch said that there is a threat to the US banking system and banks themselves if there was any further contagion from the Eurozone crisis. In terms of looking forward then, a couple of key indicators coming out of the US, housing starts and building permits, and also the Philly Fed report. But continue to watch these fixed income yields, even if trading FX and equities, as it's having a real impact across the board at the moment. Sterling in the currency markets, worth mentioning, we did see retail sales for the month of October in the UK, which did come in quite a bit higher than expected. The ONS were suggesting this was on the back of early promotional Christmas sales coming in a little bit earlier than is usually anticipated. That concludes the opening wrap for here in London. We'll have another update for you this afternoon, so I wish you all a great trading day.